Okay, is it good now? Like I think the meeting got disconnected.
Yeah, actually, I think in Zoom now there is a limit of 40 minutes. So I think that is
Oh
why
yeah.
it got disconnected.
Okay, okay.
I thought that I
Okay,
have
okay.
not taken the plan actually,
Okay,
payment
okay.
plan.
Yeah, yeah, that's fine. Okay, okay.
Mm.
So like when you choose the 30-minute candle for intraday, then do you go to the lower time frame to take the trade, or you take the trade only in the 30-minute candle?
In 30 minutes candle only, and my expectation is like if I don't get profit, I can carry forward that trade.
Okay, okay,
So that should be your expectation, because if you are seeing a good volume on 30 minutes and if you are not
okay.
getting profit in intraday, then I have seen that many times you may get the profit by next day, or within 1 or 2 days, because we have seen a good volume in 30 minutes and 1 hour time frame.
Okay, okay,
So my expectation is like I can wait for some days also,
okay, okay,
right?
okay.
So that is the reason I have started using the 30 minutes and 1 hour for intraday.
If you go for one week, what is the average returns you get, Gaurav, approximately?
I see weekly sometimes we may not get, because sometimes the market is in the sideways movement, but I can tell you monthly my average target is around 2% every month.
Everyone 2%. Okay, on
Sometimes I
average.
get 1.5, sometimes I get 2, like that only.
Okay,
But in the
I
year it
see.
is around 15 to 20% I get that return based on my capital.
I see. Got it. Okay, okay,
Right. So if I use the weekly chart, this much of returns I am getting only in stocks. Option trading
okay.
is a different thing that we have to sit in front of the screen and see it. But cash stocks will give you actually the more return as compared to options and any other things I have seen in my past 5 years experience.
So which one you said? Sorry,
The weekly charts,
the weekly charts. Okay,
yes, because they have a good number of volume in weekly charts. So
okay,
I
okay,
mostly buy on breakouts. As I
okay.
have explained you, right? Once I take an entry here,
Right.
I will exit my position here, and again I will wait for a breakout, and then again I will enter here. I will exit here again, and then wait for a breakout. So like that, step by step I go,
I see. Okay, okay.
because I don't want my capital to get stuck in those trades.
Correct. Right, right. When the market goes in the reverse.
Uh, because
Right.
we may not
Okay.
know. See, we can do some technical analysis on it, right? We cannot be 100% sure that market will give me profits all the times, right?
Right, right,
So
right.
that is why the
Exactly. Yeah.
best way, this I have chosen that I'll keep on exiting, and once it gives a breakout again, then I will take an entry again,
Oh, okay, okay.
right?
Right.
So I would suggest you to use 1 hour, 1 day, and 1 week time frame,
Okay, okay, okay. So
right?
which is
So
scalping is which is the best one out of these three?
scalping, scalping weekly chart is very good actually.
Okay.
Nobody will believe that weekly chart you can do scalping, because most of the people are doing in 1 minute and 3 minutes, right? But
Right.
I mostly follow the weekly charts to do scalping,
Okay, okay,
and I will explain you that setup also in the class. In that
okay,
setup, I use Bollinger Band and pivot points.
okay,
So only two things I use, and I am
okay,
getting a very good success ratio in that particular strategy.
okay, okay,
And so that strategy also I will uh, explain you in detail how
o-
to use it. Okay.
okay, okay.
Okay, so this is clear. Hammer point is clear, right?
Yes, yeah,
At
I'm
the
clear
top,
on this one. Yes,
and at the bottom, right? And
bottom, correct.
and it is important to practice it actually, because there are many types of hammers are formed in the market. At least 200 to 300 hammers are formed, but we have to choose only four.
Okay, okay.
So once you practice it, it will come automatically from your experience,
Yes, yes, correct. Right, right.
right? Okay. So okay, this is clear, right?
So here in this chart,
Hmm.
Gaurav, the last, the rightmost section, there is a candle formed, right? Like green color candle. If you come right,
Yeah, right.
uh,
Which date you are saying?
no, there was one before you expanded. I saw that. Okay, I think it's
No. I can move back to the same place. So we were here only.
I think we have the different. I saw the top green candle, and then okay, here if you go here, maybe in the November, middle of November, December, middle of November,
Okay.
there is a candle.
Here, this
Of,
candle you are talking about. This candle.
which one? I that's a different candle. Even what I'm saying is that after that candle, that hammer candle, there was one more candle formed, little bit more than that one. Should we consider that or not?
There are different use cases. See, so, that use case also I'll explain you how to use it actually. Okay, let's say there is one
Okay,
hammer candle here is formed. Okay, and after
right,
that, after it, if you see one more hammer candle, okay, like this, right? You mean to say
right,
like this, right? The similar
exactly,
hammer
right,
candle, but the size is bigger, right?
exactly, right, right.
So in this, you have to consider the uh, highest part among the candles and the lowest part among these two candles.
Oh, I see. Okay,
And if
okay,
there are three candles, then also you should do it like that. The lowest part among all the three candles and the highest part among all the three candles.
okay, okay.
Right? Because
And after this candle, there is a
mhm.
hammer candle. If there is any other like doji candle, any other candle formed with the
Then
same
also
size,
you have to consider the highest among all those candles and lowest among all those candles.
yes. Okay, got it. Okay, sounds good. Okay,
Okay. Okay. So the lesser the time frame, the lesser will be your profits. The higher
right,
the time frame, the higher will be your profits. So here
right.
I have shown you the daily chart. Means if a hammer is formed on a daily chart, the chances of getting profits are more. Right.
Okay, right.
See, here you have taken a short trade, let's say. So your previous swing low will be somewhere here, right?
Yes.
Around 370.
Okay.
And we have took
Yes.
an entry around 450 somewhere, right?
Okay.
So this is approximately 80 points, right?
Yeah. Right.
80 points in one quantity only.
Right. Right.
So, but for daily time frame, if you are taking in daily time frame, then you may have to wait for some days, maybe 3, 4 days or 5 days. But here you got in how many days? See, you may exit here also, but here also. See, the time
Right.
frame will be more. Time frame will be more, and profit will also be more.
Will be more. Okay.
You entered in January and you exited in mid of February.
Right.
Approximately 1.5 months you have to wait, but your
One of
profits are
months.
more.
Profits are more. Okay.
Right. So that is a good thing about swing trading
Okay. Okay.
because you can wait because you are already confident about your setup and then you can wait for some days actually.
Right.
Sometimes you may get within 1 2 days also. I have seen if we see the weekly chart, then sometimes we may get in 1 or 2 days also.
Okay. 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 So
Right.
always we should consider only the top, right, for exiting and entering and exiting, not the bottom of any candles. Only the top.
Bottom, you can think if you want to take a buy trade, then you can plan to take near the bottom
Okay.
and at the top there are only certain rules at that time only you should enter. So that rule I will tell you how to do that.
Okay.
But normally you should always buy near the lows. Right? So
Lower.
there are
Right.
two strategies: buy low, sell high, right?
Sell high. Correct.
And second is buy high,
Sell low. Okay.
sell higher.
I'm sorry. Sell higher. Correct. Yeah. Yeah.
So this everyone knows actually buy low, sell high.
Right.
This
Buy
everyone
low.
knows
Sell
how to
high.
do it. But this is a catch actually: buy high and sell higher. So this
Higher.
is
Okay.
basically these are the momentum stocks which are already moving in the market.
Okay. Okay.
So if we consider these type of stocks, we can quickly take the entry and quickly book the profit within 1 or 2 days also many a times.
Okay. Okay.
Okay, so this I will teach you how to do it. This.
Right. Okay. Okay.
Okay. So first let's finish all the basics and then I will teach you the strategies
It
also.
is. Okay.
Okay. So this is clear, right? Hammer.
Clear. So hammer is clear.
Uh, Sometimes we call it as a hanging man also. The hanging man will look like this. the फांसी पे लटका हुआ आदमी, right? Like hanging man.
Right.
Sometimes this hammer will look like this also. So you don't have to
Hmm.
worry. The same you have to consider. See, like this,
Right. Okay.
like this.
Okay.
So this we can call it as a hanging man also.
The
This is,
body will be less. I mean, the
ah,
width will be very less compared to
ah,
hammer.
right.
Okay. That also
So
we can consider the same as hammer
this is a
for
variety
taking.
of hammer only. This is a variety of hammer, and this is a variety of doji candle also. So it's a mix of hammer and doji.
Okay.
But yeah, but this you can consider as a part of hammer or doji also, because both the
I
candles we
see.
have to trade in the same fashion.
Right. Okay. Okay.
Fine. So this is clear hammer.
Hammer is clear. Yes. Even the reverse also the same, right? Reverse for
Ah,
hanging man
yes,
also
yes.
the same.
Hmm.
Okay.
Okay, let me see if I'll show you on something. See, like this candles. If you see these kind of candles, right?
Yes. Yes.
These so many 5 or 6 candles are there, right?
Right. Right.
So in this, what you have to do, you have to consider the high among all the candles and low among all the candles,
Correct. Okay. Okay.
like that, and then you have to plan your trades.
Correct. Okay.
So
Sounds
this
good.
basically called as accumulation,
Okay. Accumulation.
because it is happening at the lower side.
Okay.
If the same thing happens at the top, then it is called as distribution.
Oh, distribution. Okay.
Means the big institutions they are planning to sell. Distribution means the big institutions are planning to sell, means they are selling small chunks, and here they are buying small chunks.
So that means that irrespective of the color of the candle, right? Does
Yes,
the
yes,
color of
yes.
the candle matter?
Color doesn't matter mostly here in this kind of scenarios. There's
Okay.
there
Okay.
are some other setups in which the color of the candle is important, but here color doesn't matter, because all the
Okay.
candles are like very small, right?
Right. Right. Yeah.
Right.
Okay.
So this is
Yeah.
how we can use sometimes accumulation also, and sometimes distribution also.
Distribution. Okay. Sounds good. Okay.
Okay. See, there are many use cases which you can see considering the small candles, right? Let me show you one more use case. See here, like in this scenario, if you see that there was a downtrend, and we can see one hammer here also, and then one hammer
Right.
here also, right?
Right.
And one hammer here also.
Okay.
Okay, so we have to consider this hammer. We will not consider this hammer because for a downtrend, we have to minimum consider 4 to 5 candles. But here we have only 1, 2, and 3 candles. So this hammer we will not consider here.
Oh, I see. Okay. Even for uptrend, downtrend, we have
Yes,
to wait for 4 or 5 candles.
minimum four. If they have minimum 4 or 5 candles, then only we will enter the trade.
Okay. Okay.
Fine. So here, once we see a hammer, we will be active, and then we will wait for the next candle. See, next candle is also hammer, right? So now we have to
Oh,
wait.
yeah.
Now we have to wait for the high to cross the high of this candle and the low of this candle
Okay. Okay.
to make an entry.
Yeah. Okay.
Right.
Okay.
Okay. And, and this scenario also, right? You can see. Now this is called as base forming,
Right. Okay.
because the fall has stopped here, and it has started making few of the green candles, right? 4 5 green candles are there, right? So that means it is forming a base.
Okay.
So here we can try to make an entry here, and our stop loss will be the low of this base,
Okay. Okay.
and our target will be huge in this case, the previous swing high here.
Correct. Okay.
So that is why daily chart and weekly chart will give you very good returns, but you have to wait for some time. So that is the
Okay.
only.
Okay. Got it.
Okay, so hammer and use cases are clear, right?
Yeah. Hammer use case is clear. Yes.
Okay. Now we will move on to candle called doji.
Okay.
So, any idea about this candle, doji candle?
Doji candle, it's just like a small line with high and low.
Yeah. So this normally looks like this kind of plus sign, right? This normally looks like
Right.
this.
Plus sign, correct.
Uh,
Okay.
So we call it as a indecisive candle.
Okay.
Indecisive.
In this, okay. We cannot take any decision based on these candles.
Because this candle will itself says that buyers and sellers are equal.
Equal, correct.
Top and low are they are equal. So that is why, and in this case also open price equals to close price. If there is a perfect doji, the open price will always be equal to close price.
Okay, yes. Okay.
Okay. So that is why it is called as indecisive candle. Right.
Candles, okay.
So there are two varieties, and apart from that, there are two more varieties of doji candle. Okay.
Okay.
One will look like this,
Okay.
and one will look like this.
Right.
T shape, and this is called as a reverse T shape. Okay.
Reverse t-shirt. Okay.
So this is called as sorry, this is called as dragonfly doji.
Dragonfly doji. Okay.
Dragonfly doji,
Okay.
and this one is one second.
Gravestone, I think, right?
Gravestone, right? Correct. This is gravestone
Okay.
doji. So
Okay.
this in this kind of candle, normally we take a short trades,
Okay.
and in this kind of candle, normally we take buy trades, right?
Not. Okay. Okay.
Okay. And sometimes you may see a mix of hammer and doji also, right? So this T candle will be like this, and there will be a small wick also at the top sometimes,
Right. Right. Yeah. Okay.
and there will be a small body will also be there.
Right.
So like this, you can consider this at a hammer then, that scenario,
Right.
right? So how we
Okay.
have to trade the doji? We have to trade the doji in the similar manner we were using the hammer. Same thing. Once it crosses the
Okay.
high, we have to take a buy trade. Once it crosses the low, we have to take a short trade. Right.
Sorted. Okay.
I will show you some examples in the chart. See, these are all the doji candles, right? You can see perfect doji.
Yes. Correct.
So if I take my cursor on this doji, you can see the prices at the top right here.
Yeah.
So here you can see open price is 127.26 and close price is 127.17. Very nearby
Right.
only, not much difference, right?
Yeah.
So that is one more sign of doji. Open price and close price will almost
Both
be same.
price. Okay. Okay.
So let's say you want to trade this doji, then how you have to use it? You have to just mark the high and low of this candle
Okay.
and then wait for the breakout. If it crosses the high, you take a short trade, and if it and based on the time
Okay.
frame, let's say your time frame is let's say 15 minutes, then if you enter here, you can exit at the next candle only.
Next candle. Okay.
Here only you can exit, right?
Okay.
And
Okay.
if you take a short trade, you can exit here only. Next candle you have to
Okay.
exit. Okay.
Right. Okay.
So similarly, if you are taking a daily chart, then you can wait for 3, 4, 5 candles, or based on the previous thing, you can wait. But in 15 minutes chart, you have to exit very quickly.
Okay.
Okay. And here you can see at the top also, it's a kind of gravestone, right? A mix
Right.
of
Right.
hammer and a kind of gravestone, right?
Right.
So these candles are actually they have a very good accuracy. These kind of candles,
Okay.
if these kind of candles are formed at the top, they have a very good accuracy. So here you should take a short trade,
Okay.
right?
Irrespective of the color again.
Irrespective of color, and then you can take a short trade. And if you see a doji is formed again at the bottom, once you took a short entry here, and again you see after two candles a doji is formed, you should quickly exit your shorts
Okay. Okay.
because here it is saying uh, indecision between buyers and sellers, right? Again, a doji is formed here. That means there is a indecision again between buyers and sellers, right?
Right. Right.
So here, if you see a doji is formed, quickly you should exit your short trade and wait for the next trade here.
Next trade. Okay.
So
Okay.
fear and greed. Fear and greed should not come in your trades, right? You should follow only
Right.
the charts, only the discipline, profits and
Okay.
loss. That's it. Because see,
Right.
the market is not going to end tomorrow or day after tomorrow, right? We will have a long time, right? So we can wait for
Correct.
the trades.
But only the short selling, it's a bit risky, right? Like where the market keeps going
Yes,
up,
yes.
then we have to get little bit risky. Open, like we take a long position, that's good. We can wait for a
Uh,
couple of days or a week,
yes,
but
yes.
short is little bit risky.
So normally I don't try to do short selling in the market. I don't want to take that risk because I am getting sufficient from my buy trade. So that is why I don't take that much of risk in short selling. Right.
Okay. Okay.
Because once you have a big capital, na, then you will think that why to take so much risk. You will
Correct. Exactly. Correct.
earn money
Right. Right.
slowly and only, right?
Correct. Yeah.
Right. Yeah. So here you can see again there is a consolidation going on, right? You can see the market has formed a range.
Right.
So now you have to wait for the range. Or if you are a scalper, you can buy here and you can exit here, or you can short here and book profits here. So like that you can do if you are a scalper. But if you are a positioner or a swing trader, you have to wait for a breakout or a breakdown in this range because this is a range market has formed.
Right. Okay.
So so below this you have to take a short trade and once it crosses here you have to take a bite. That's it.
Right. Okay. 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 Okay.
Okay. See, there is one more candle similar to kind of gravestone, but it has a body, right?
Yes. Okay. So this is called the gravestone.
Gravestone, but it's a mix of hammer because we have a body here also, right? Normally in
Body too.
gravestone, normally in gravestone there is no body,
Correct. Exactly.
so it's a
And
mix
hammer
of
does not have so much big wick, right?
ha ha
That's
ha. So that is why
okay.
we can consider it's a mix of hammer and gravestone, though. But we
Gravestone.
should
Okay.
trade, but we have to trade this candle.
Okay. Okay.
Okay. So what we will do, we will mark the high and low, and then we will trade based on the prices.
Okay.
Okay,
So the
this clear?
previous side did not come here, right? Like when we
Uh, yeah,
went to start that, take the trade.
yeah. So the important thing is the first step is important. What is that? We have to learn how to identify that candle. We should identify the correct candle. Then only we
Okay.
can trade a. Then only we can take the correct trade, right? When the candle is
Right.
correct, then only we can take the correct trade. Else,
Right.
as we may get stuck in the trade, right?
Correct. Yeah.
See, two small candles are there, right?
Right.
Mostly kind of doji you can say, or mostly kind of hammer you can say, because body is there, right, in both the candles,
Yes.
small
Right.
body. But these are
Right.
very very small, both the candles are very small. Then what we have to do
Right.
here, what we have to do here, we have to high and low, right?
Low. Okay. Right.
And then we have to see the trade where it goes,
Previous cross high. Previous current.
high among those two candles and low also among these two candles.
Okay. So where do you take that trade?
Here the once it crosses the low of this price, then we will take a short trade, and once it crosses the high of this candle, then we will take a buy trade.
Right. Okay. And the stop loss will be here. Like the stop loss,
The
I know,
top.
but the target.
See, you can enter here and target. You can. I have explained, based on the risk reward ratio, you can identify, or you can identify based on the candles here. See here. 1 second. You can see a kind
Previous
of
stop, you say.
this
Okay.
candle. You can see now similar to gravestone, right? So
Right.
you can try
Okay.
to exit in this area.
Okay. So how do we take this that inverted the red candle? How did you identify?
Which one? This
There are
one.
other candles also.
This is gravestone, na?
Okay.
This is a kind of gravestone doji, right? Means
Yes. Yes.
means the sellers went down from here, right? So that is
Correct,
a kind of
correct.
so that is why I have taken this area as a target,
Okay,
because
okay.
we don't
I
see,
see.
because we don't see any other swing low here, or you have
Yes.
to wait for this area.
Okay, okay.
Right? So two areas are there for you.
Right, right.
Uh, See, sometimes the previous swing high and previous swing low will be clearly visible, and sometimes it may not be. It may not be
Yes.
visible clearly. So you have to consider any one important candle out of that.
Okay, okay.
Right? Let's say if you short here, then you have this area right at previous swing low. You can wait till here
Okay.
if you take in a short position here, right? But
Right,
here,
right.
but here if you take, we don't have any previous swing high available here, right? Only this
Correct,
thing and this thing is here.
correct. Okay.
So if you have waited till here, you may have exited within a day or two. But for here, you may have to wait for a longer time.
Okay. So that looks like a fake candle, right? Like a big long one. Is it like a
Ah,
fake or is it
ah. This is a fake out actually. This is a fake
fake
out
out?
because normally the gravestone doji we will try to take a short position, but as we have discussed that high and low we have to wait. So here if you have waited for a high, then it is correct. But blindly, many experienced traders like me also, if there's a gravestone doji formed, then we will take a short trade blindly.
Oh, okay, okay,
So, but
okay.
this was a fake. This was a fake candle, so the stop loss will get hit here in this scenario,
Right, right. Okay, okay.
right? So some trades, as we are experienced traders, so some trades we will take based on our experience also.
Right, right. Correct.
Once you
Based on
learn
the
it,
past.
once you keep on practicing, once you have experience for 2, 3, 4 years of experience, then also you will like just see the candle and then quickly you will decide what you have to do, whether you have to enter the trade or you have to exit the trade. So
Right, right.
that will come automatically in your brain actually.
Yes. Okay. Right, right.
Right.
Karo, do you use AI tools, AI training, like you had the help of AI?
No,
No, right. There are
I
many
just
tools come in
follow.
the market, right?
There are many market. They are selling it. They are mainly for business purpose only. So I don't buy anything. I just
Okay.
buy. I have just bought some scanners actually. I have created some screeners for Indian stock market. So which I have purchased. I pay around 750 per month. 750 rupees per month for that scanner,
Oh,
because
okay.
that will help me to filter out the stocks, and out of that, let's say that scanner is giving me 15 stocks. So I have to see only 15 stocks, right? But if I
Okay.
don't have a scanner, then I have to see many charts, right? 50 or 100,
Yes.
like it's difficult to.
Correct. Okay, okay.
So if you are getting a chance to buy some scanners or screeners, then I think you can do it. But softwares and all, I don't think AI and all will work in this market, because many of the
Okay.
institutions they are using algo trading and all, right?
I'll got the correct, exactly. Yeah.
And there are many smart money concepts and that I will teach you. So those are very, very high level of concepts that mostly the institutions and the persons who are having very big capital like 50 crores, 100 crores, 500 crores, they use those
Okay.
concepts to buy the stocks actually.
Oh, okay, okay.
So if you know those smart money concepts now, then you don't need any kind of algo and all, because those concepts only they will use in algo trading,
Oh, okay. Right.
right?
Okay.
Okay, so this is clear, right? Hammer and doji.
Yeah, this is clear. Yes.
Okay. So apart from that, we have many other single candle patterns like I've told you bullish Marabuzu, bearish Marabuzu, right? But
Yeah,
normally we will
yeah.
not use it for trading purpose. We will try to use only the hammer and doji, because these are kind of reversal patterns or kind of indecisive candles.
Okay.
And these candles are having more accuracy as compared to bullish Marabuzu and bearish Marubozu.
Okay.
So those two candles, bullish and bearish Marubozu, we should try to use only with the combination of 2 or 3 candles.
Okay.
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 So now we will talk about some patterns which we have to see more than one candles. Right.
Okay.
I'll share my screen. Okay. Okay, this candle is called as bullish
Bullish engulfing.
engulfing. So, do you know about anything about this candle, bullish engulfing?
Yeah, engulfing, as far as what I understand, is the next candle will be like the top and bottom, which should be more than the previous one.
So, engulfing means this candle will cover this candle fully.
Fully. Okay.
Then we will think that it's a bullish
That should include the
engulfing.
body only, or also we can consider the wick, the second candle.
Both.
Both.
The
Okay.
full candle we have. See, the candle is full. See, the body means. See, if you think about a human being, right? We have to consider from
Mhm.
head to foot, right?
Correct. Yes.
Similarly, the candle also we have to consider from the head, like the top wick till
Okay.
the lower wick,
Bottom. Got
bottom.
it. Got it. Okay. Got it. Okay.
So this is bullish engulfing. See, you can trade this candle as a kind of hammer also, hammer or doji, because after a downtrend we can see this candle, right? Kind of
Right.
hammer.
Yes.
But
Right.
for a double confirmation, we will sometimes use bullish engulfing. So after this
Okay.
small red candle, there should be a big green candle which should cover the previous candle, and then only we will take a trade here, right?
Okay. Okay. Right.
So we will try to enter once it crosses the high of the third candle. Actually, here we will
Oh,
enter basically on the third candle.
okay.
The high price it crosses, then we will take a entry. And
Okay.
since this is a very big candle, so our stop loss will be here 50%.
Okay. Okay. Okay.
So 50% stop loss is the concept which is used by smart money. Stop loss
Okay.
50%, right? So they mostly use it
50%.
in algo trading.
I'll go tell you. Okay.
Okay. See here you can see the third candle went here, but it didn't close it. It came towards the upside, right? Here
Right.
third
Right.
candle.
Right.
So you have to wait for a candle close actually. Then you
Okay.
will get a confirmation,
Okay.
right? So here you will entry. Your stop loss will be in like 50%, and then target you can decide the previous swing high like this. First thing,
Okay. Okay.
second thing.
So take trade on the third candle, right? Not the first, second one. As soon as if your second is completed, that they can take the trade.
But sometimes they will form small candles also here. Then you may not get a third candle. You may have to wait for fifth or sixth candle also.
Okay. Okay. Okay.
Right? But we have to wait for the high to cross. Then only we will take the buy trade.
Okay. Okay.
Right? So this green candle is a confirmation for us actually.
Okay.
If you are a risky trader, then you can even enter here also.
Okay. Okay.
So depends. See, totally depends on your risk appetite. How much risk you are willing to take.
Right. Right. So after that, it might chances are there it might also go down right after that red candle, red
Yes, it can. See, even after this also, it can go down. We don't know.
go down. Right.
Yeah. So that is why we always should use the stop losses.
We should wait for the engulfing candle and then take the trade on the next
Yes.
when the crosses to this engulfing candle.
Yes. Right.
Okay.
So find this here bullish engulfing.
Yeah. Yeah. Bullish engulfing is good.
Uh, and this mostly try to trade only once it is formed at the bottom only. Don't try to use it at the top.
Okay. Okay.
Right.
So engulfing it can also come up, right? It's a reverse engulfing or something like bearish.
We have bearish engulfing. So this is formed
Okay.
at the top.
Okay.
So in this, we have a small green candle and a big red candle will cover the this is green candle.
Okay.
And then once it crosses the low of this candle, see like this here.
Nice. Got it. Yes. Okay.
Once it crosses the low, we can take a short trade, and our target will be
Okay.
the previous swing low,
Previous low.
previous swing low, target.
Okay.
See here in the chart also, I have taken a snapshot from a chart. Here also I have shown the bearish angle swing, right?
Okay.
So once it comes down, you can take a short position here, and you can exit here in this area.
The exit here. Okay.
First target, like second target, so like that. So it depends on you, like how many targets you can wait.
Okay. Okay.
Okay,
So, how
and
in your experience, like the first, if you exit completely, or like like stage by stage, which has more success rates?
see, success rates are the same. It totally depends on your psychology, how your psychology works actually.
Okay.
Right. So my psychology works that way that once I will exit and then I will enter again.
Okay. So you
Right.
don't wait for that. Okay,
Ah.
got it.
So
Okay.
that is why you should know all the scenarios, like in what all scenarios you can exit, and based on your psychology, you can try to set that thing for you.
Right. Right. Okay.
Because for some
Yeah.
persons,
Okay.
the breakout may work. For some persons, the chunks selling in chunks may work, right? And for some
Definitely work.
persons, the trailing stop loss may work, right?
Correct. Okay.
Okay.
Okay. Sounds good.
Find this clear bearish
Yeah.
and
Bearish engulfing is
bullish.
good. Yeah.
Okay. Okay. And then we will talk about some patterns also, like multiple candles, like more than
Okay.
10 to 15 or maybe 50 candles also. Okay. So there are some
Okay.
patterns. Okay.
Hmm.
So do you have any idea about breakout and breakdowns?
Yes, breakout is when when it's reverse here. If we say like there is a uptrend, then it's a downtrend, which is the correction, right? This is called a correction, and then it crosses the previous high, then it's a breakout.
Okay. Fine. I will show you directly on chart.
When there's a higher high form, then it's a breakout, right?
Hmm. Yeah. See, there is this scenario here. You can see that this area, right? There was some resistance area you can
Yes.
see in this area, right?
Right.
After that, the stock went down and then it
Down, yeah.
tried to came up here. So this is basically a breakout candle, green candle,
Breakout. Right. Okay.
because there was a lot of resistance. The
Correct.
stock consolidated a lot. After that, it came down and then here it gave a breakout. So breakout has to be
Breakout.
given by a big green candle.
Okay.
So normally the percentage will matter here, like what percentage, what part percentage is crossing the resistance. So here you can see that 70-80% is on the top and
Right.
20% at the bottom of this green candle,
Okay.
right? That means it is a good
Right.
out. It can be in a different way
Okay.
also like this.
Okay.
If it is more than, if the lower bottom is more than 60% and don't consider it as a breakout, it may be a
Okay.
fake breakout also.
Oh, I see. Got it. Okay. Okay.
So either 50-50
Or more than 50
or more than 50 at the top.
at the top. Okay.
After the resistance, it should be at the top. The candle
Okay.
should have
Okay.
crossed more than 50%, at
Okay.
least
Okay.
50%. Then only you will consider it as a confirmation breakout.
Okay. Okay. Okay.
So once it takes a breakout, and then you can wait for a target's previous
Okay.
supply.
Okay.
See, breakouts are perfect to trade. They have a very good accuracy. If you are clear about the breakout candles, like the percentage, right?
Yes.
More
Yes.
than 50%, then the breakouts are very good. They are having a very good accuracy actually.
Okay. Okay.
So
So
this
that
was
will
a
be kind of an aggressive trading, right? Should we wait for the consolidation of the reverse correction phase, or we can take the right trade there
can
itself?
take, see, for swing trade, what I normally do, I will take a entry here only. And if the stocks tries to come down or it tries to come a retest here, then I will add some more quantities.
Oh, I see. Okay.
Because
So
sometimes,
how do you consider that when you take the trade there? Like
hmm,
how what is the confirmation you have that will go up?
hmm, wait. The confirmation is only like two confirmation which I have explained.
Are you able to hear me?
Yes, I can hear.
Okay. Okay.
Okay, do you have any questions from the previous class?
Yes, so far so good, Gaurav.
Okay, fine. So till what point we have finished? We have just finished the basics, right, of options.
Basics of options, correct. But still, we are good to go many things, right? Like the Greeks and other.
Those are
Uh,
actually the see Vijay. Those are actually the theoretical part. They are not used in trading. So if you want to
okay,
study, you can study yourself. Those are not useful in trading.
I see. Okay, so
First,
we don't have to take all those into consideration then.
no, no, no. Those things are not needed.
I see. Okay, all right,
Okay, so we have finished the option chain, right? Last class.
correct.
Okay,
Option
so
chain we have done. Yes.
so today I'll show you some charts and tell you how to find the strike price, which strike price we should choose based on the trends and based on the charts, right?
Okay.
So any specific stock you want me to choose to?
Yeah, sure. Like, can we choose Mara? Yesterday was the
Mara is
same only.
trading in future and options,
Options as well. Yes.
but I think the chart is like yesterday we discussed, right? Same chart, no?
Yeah, same chart.
Okay, okay, fine. I'll just share my screen.
Yesterday we spoke about the stocks.
Yeah, yeah. Okay, yes. Okay. So, again, here also one thing matters like what type of trading you want to do, intraday or positional. Based on that, you have to choose the time frame. First, you have to choose the time frame, right? So, if you are
Okay.
looking to do for positional trades, then you have to do check the daily time frame, right? For
Data.
positional
So
trade.
question. So here we have 1 week. So we should be doing it within the week.
Yes.
So in case if we take on Friday, sell on Friday, is it good or like take on Monday, Wednesday? So which is better actually?
See, based on the charts only, we will decide when to take those
I see.
strikes.
Okay. I see.
So, based on our inputs, right? Our inputs will be purely based on the charts.
Okay. Right.
Okay. So, either you can choose 1 hour chart or you can choose 1 day time frame. Two options are available to use in option trading.
Okay.
Let's try to use 1 hour chart, right? Okay.
Yeah.
So, here we will try to use the Bollinger Bands. Okay. So, I
Okay.
will plot the Bollinger Bands. Right. Yeah. And then we can plot the pivot points as well.
Okay.
Okay. So now, first of all, you have to see the trend. What is the actual trend of the stock, which is currently going on, right? So
Yeah. Okay.
to see the trend, first you have to see the trend. Then you have to find from the daily time frame only. Daily time frame only will confirm you what is the current trend going on, right? So here you can see
Okay.
that we are near the lower Bollinger Band, near the demand zone, right?
Okay.
And second thing, you can see a doji is formed here, right?
Doji is formed. Correct. Yeah.
There was a downtrend and we have a doji form. That means there are chances of reversal from here, correct? Based on our
Okay.
technique.
Yeah. Correct. Yeah.
So that means that we are looking for this stock to go towards the upside.
Okay.
First thing that we have to analyze from our charts. So this is the first thing that
Okay.
we from our chart is like we are looking to analyze it like this stock should go up in
Upward.
maybe like 1 day, 2 days, or 3 days, or 4 days. Like maximum time frame is 1 week, right? So considering 1 week,
Okay.
we are thinking that
Yes.
this will go upside.
Stock will go up.
Uh,
Okay. Yeah.
So now we have to see like till what point the stock can go, right? The stock can go either this one, which I have explained you, and the second destination is this one. There are two destinations, target one
Right.
and target two,
Yes.
right?
Yeah.
So we should try always to choose the target one because our time is less, right? We have only 4 to 5 days of time, right?
Right. Right. Yeah.
Target two, you can choose if you have more time frame, right? Like 2 weeks or 3 weeks, like that, right?
Okay. Yes. Correct. Yeah.
Because there in US, I think you have only weekly expiry, right? Every week you have
Only week. Yes. Only weekly expiry.
only
Correct.
weekly, no monthly expiries are available, right?
No. Yes. Yes.
Okay, fine. So then what you can do is that if you want to achieve target two, then the best thing is to choose the 1 hour time frame. So from 1 day time frame, we have analyzed that the stock may go towards the upside. Now we have to go
Oh,
to 1 hour time frame and see the targets, right? So we can think here also as our targets. The blue
middle
line,
median.
the middle line, and the
Okay.
this line 17.5, right?
Target
So
one, target two.
we will note down actually the target one here is coming around 16.5, right?
Correct. Yeah.
And target two is
17.25 something.
17.25.
Yeah.
And let's see the target one from daily time frame as well.
Okay.
It is 18, right?
Yeah.
18. So we'll note down all the three.
Okay.
So that means our target three will be approximately 18. So these three will be our
18.
targets, right?
Okay.
So now based on these targets, you have to choose the options, right?
Okay. So
So first,
18, how did we choose 18? Like is the previous high?
the blue line of daily time frame, right?
Yeah,
That
that is 17.25. The
here,
blue, the
here,
middle.
here. The chart. Daily chart is also there, right? For daily chart, the
Yeah.
blue line is 18.18.
Correct. Yes.
So two targets I have taken from hourly chart and one target I have taken from the daily chart.
Okay. So hourly chart also. So hourly chart, we have to take only the middle one, is it?
The first target is, see, I have taken target one, which is
Day.
the middle one from 16.5 and the upper Bollinger Band 17.25, right? Two
Okay.
targets.
That is the day time frame.
No, these two are hourly. The first two are hourly, right?
Oh, but you are chosen day, right? Like if you see the chart, it is looks like it is day.
Wait, I'll show you again. So this is my daily time frame, right?
Yes.
And this is my blue line. So target is 18, right? This is 18,
Correct.
correct?
Yes.
Now,
Right.
now I will go back to hourly chart. Okay.
Okay. Okay.
Now the middle one. So
That is 17, up 16.75 something.
16.75. Target two is, sorry, target one is 16.75.
Okay.
And target two is this one here, right?
Oh, I see. Okay. So, okay. Said. Okay. I understood. Yeah.
17.5, right? So
Yeah. Yeah.
whenever the stocks tries to move toward the upside, the first target will come this one, then this one,
Mhm.
and then the third, which is 18, right?
Will be the daytime frame, the middle. Okay.
Right. So
Okay.
T1, T2, and T3, we have our three targets, right? So we have to
Right.
focus on only three strike prices.
Okay.
Okay. So now it depends on your risk appetite, like which strike price is, how much is the premium of these strike prices, and
Okay.
what is the lot size? Can you tell me? Can you check and tell me like what is the premium and lot size of this stock?
Yeah. Give me 1 second. I'm just noting it down.
Yeah.
So, taking the current week, right? It's to expiry will be tomorrow,
Mm.
or you want to make to take the next week?
Okay. Okay. Tell me one thing.
Uh-huh.
The expiry is tomorrow, right? So if I want to buy for the next week expiry, can I buy today? No.
Yes, yeah, we can buy. Yes.
Then we will try to buy the next week, because here we have only 1 day remaining, right?
One day. Yes.
So we'll
So
not.
next week expiry is next Friday, which is 8th of August. So
Hmm.
like we have in which price should I select? In date, out date, like in the market, at the market.
We have three strike prices here, right? We have chosen three targets: 16.75, 17.5, and 18, right? So based on this, we have to select the strike prices.
Closest to that, you mean?
Ah,
So 18, 8, 16.6, which we should take? Like 17, there are like I have 17.5, 17, 18, 16.5.
then first is 16.5, which is the nearest one, right? How much is the
Yes,
premium
it's,
for that?
is it for a call buy, right?
Call, yes.
Call ask will be 0.58. Ask.
Okay. And 17,
17, it is 0.39.
0.39, right?
17.5, it is 0.27.
Okay, okay, I think that's sufficient. So 16.5 must be the at the money, right?
16.5 is at the money, correct.
At the money, correct, right? And these two are the OTM, right?
Out of the money, correct.
Out of the money, right? So the
And this is for boss, for ask. This is for ask means like bid is this for uh,
no,
selling,
that is
selling, right?
no, that is fine. That may not be much difference, right? Bid and ask may not be
Three
having much
cents,
difference.
2 cents, 2, 3 cents, 1 or 2, 3 cents difference.
Okay, that is fine, right? So we are just I'll just explain you with this only. So
Oh, right.
so so what is the current price of this stock? The current future price?
Current price buy is 16.27.
The current future price, right? You are telling me the current future price, right?
Bu-
16.27.
Buy price, current buy price.
No, no. See, there are two things. I have told you yesterday that we will have two things. One is equity, which is cash, and
Yes,
other one is future.
correct.
So cash is called as spot, and future is called
Spot.
as
Okay.
future. So the
Oh,
one
this is spot. This is spot. Equity spot.
I want to know future price.
Okay. How do you know future?
You can write like Mara and future.
Okay.
FUT will be shown there in front
I
of
should go and
Mara.
query for.
Okay, it is not visible there, like in front of you, you cannot see like
Yeah,
the future and all.
it is not visible. Yeah, it is not visible here. It is only showing Mara,
Okay,
Mara holding, and then
okay, no problem. Then I'll explain
future.
you with this only. Then no problem. I'll explain you with this only. So see,
Okay.
there may not be much difference in future price and the spot price. Like there may be like point 0.1 or 0.15 like that. There may not be much
Okay.
difference, right? So you
Okay.
should always
Okay.
consider the future price whenever you are trading in future and options. You should always consider
Okay.
the future price to calculate like which option you have to buy, right? And what is the lot
Okay.
size?
It is 100.
100. Lot size is 100, right? So let's say
Yeah.
you want to buy a strike price of 16.5. Then in that case, you have to pay a premium of 100 into 0.58,
Right.
which is coming around 58.
Right.
$58.
Okay.
$58
$58 for one lot.
for one lot. If you are trading in one lot, you have to pay 58. So that is your premium that you have to pay, right?
Correct.
Okay. So the current price is 16.27, and the one which we are buying is 16.5, right? Once we do a minus, how much it will come?
16 point. Now it is 38. Now it is 16. Let us take 16.27. 23. Yeah.
0.23, right? So that means in 0.58, in 0.58, 0.23 is
Okay.
the time value, 0.223 is the time value, and point, how much is the remaining?
Out of that 58, you mean?
Ah,
Okay. 30, 35.
0.35, right? So 0.35 is the intrinsic value, and
Okay.
0.23 is the time value.
Time decay or time value. Okay.
Time decay or time value, right? So once you reach the expiry, this value will become zero. If
Okay.
if this stock will not reach 16.5.
Okay.
So that means if the stock remains at 16.27,
Okay.
then how much value you will get? Wait, I'll show you in Excel. 1 second. Excel calculation
Yeah,
will.
that will be better.
Okay.
Yeah, that will be better. I can also note
Yeah.
down if it's
Yes.
in Excel.
Because here I may also forget, and you may not able to
Exactly. And I
calculate.
want to, yeah, yeah.
Yeah.
I'm just like noting it down. If it is in Excel, I can just copy it.
Yeah. Right. So the premium is how much? 6.58, right?
Uh, Yeah, I'm not seeing your Excel actually.
1 second. I'll just share this. Now can you see?
It is actually starting to, yes, now I can see. Yeah.
The premium is 0.58. Strike price we have chosen 16.5, right?
Yes, 16.27 actually, strike price.
No, strike price 16.5. That is the current value, right? The current price is
Yeah, yeah,
16.27.
27. Current price is 16.
Uh,
Yes,
and we have chosen 16.5, right?
5 is a strike price, correct.
Right. So what was the formula I told you for 1 second? I'll help you with the formula. You can note down the formula first.
Okay.
1 second.
Interest, intrinsic value, time value,
Uh,
premium.
so intrinsic value is the gap between strike price and the
Current price.
current price. So what is our option strike price in this case?
Strike price is 16.50.
16.5, 16.5 minus, and the underlying assets current price, which is 16.27, right?
Yeah.
So
So which
the
is the premium?
this
Premium.
is the, yeah. So this is the
So I sorry.
intrinsic value. This is the, see, this I have done strike price minus current price.
Okay.
This current
Strike
price
price
means
minus current.
the one which we have taken from the future, right? 16.27.
Okay.
So
Okay.
this minus this, I will get the intrinsic value, which is 0.23. Now I want to calculate the time value. So that I have to
Okay.
calculate by 0.58
Okay.
minus 0.23.
Hello.
Yeah, can you hear me?
Yeah, it's some interruption. Now it's clear. Yeah. So intrinsic value is equal to strike price minus the current
Current price.
price.
Yes.
Okay. In this case, 16.50 minus 16.27.
Yes.
Okay, which is equal to 0.0, Okay.
And the time value is 0.35, which is 0.58 minus 0.223.
Okay.
So this
One
is
second. Let me know the
uh, so,
time value.
so this is the total premium that we are going to pay here.
Time value is equal to
Premium
premium
minus
minus intrinsic value.
intrinsic value. One second. Let me reconfirm intrinsic value equals to
Mm,
premium minus.
Intrinsic value is 0.23. 35, right?
Hmm. Yeah, correct. Point.
All right. Yeah. That's,
Okay, this clear?
yeah, this is clear. Yeah.
Okay. So now, since you have chosen the strike price of 16.5, right? So your option or a stock should have an expiry of at least 16.5 plus the
Okay.
premium you have paid, right?
Okay.
At least if the stock reaches to 17.08, then you will be in no profit and no loss because you have paid a premium of 0.58, right?
Correct.
So
Right.
what I have done to calculate this, I have added the strike price which you have purchased plus the premium.
Okay. Okay.
So this I got 17.08. So your expiry has to be beyond
So,
17.08 so that you can make some profits.
so the cost price will be and current price plus the strike. No, no,
No,
strike price plus the premium.
current price will not come now. Now the strike price, whatever you have purchased, right? So you have purchased a contract of 16.5, right?
Yes. Yeah.
And yeah, you have paid a premium of 0.58, correct?
Yes. Yeah.
So
16.5
16.5 plus 0.58.
point point five eight. Okay.
So the stock should expire beyond 17.08 so that you can make at least some money.
Correct. Including our commission, like premium, we can get that money. Okay.
Yes. If stock expires at 17.08, then you will get whatever you have paid minus the brokerage charges, whatever the brokerage charges you have paid, that will
Correct.
be
Yeah.
subtracted, right?
Right. Yes. Yeah.
Right. And if the stock expires below 16.5
It's a
or
loss.
below 17 point, let's say the stock expires at 17, right?
Yes.
Then how much you will get?
Zero.
16
We
point
lost.
16.5 like 17 minus 16.5. You
Yes.
will get zero point 0.5 back.
But again, the premium is lost, right?
You have paid 0.58 and you got only zero point 0.5. So you are in a loss of
8
0.08.
cents. Correct.
Yeah. Okay, this clear?
Yeah. This is clear. Yeah.
So beyond this
So
value,
what is this? Why we should consider IV and time value? Just to
to
know, or
calculate,
like is it?
just to know and calculate like how much we can make the money and how much the option price should expire so that we can make some money.
Something can be called. Yeah.
Okay,
Good, right? Yeah.
so we should know about
Uh,
intrinsic value and time value, right? Because so that
Right.
we can calculate like on expiry, what will be the expiry. Based on that, we can calculate how much profit we can get or how much loss we can get. So just for the calculation purpose, we should know about that.
Okay. Okay.
Because premium is a combination of intrinsic value and time value.
Right. Yeah.
Okay. So this concept is clear.
Yes. Yeah. This is clear. Yeah.
Okay. Fine. So here we are choosing 16.5, right? Strike price. So that is why we
Right.
are choosing 16.5. So the expiry has to be beyond 17.08, right?
Zero. Yes. Then only we'll get the profit. Yeah. Okay.
And what targets we have chosen? One second, I'll share the trading view. And we have selected the targets as 16.8 and here 17.4341. So we have
Right.
to keep this target at least T2. That is why
Okay.
we are checking the hourly chart. So
So
we need
let
to
us.
keep the target
Okay. So
17.42.
T1 T2 T1 is will be 16.75,
Huh.
and T2 in this case will be around 1740
So
something.
so we will calculate for both, right? I'll just show you the Excel sheet and we will calculate for both. Like if the
Okay.
premium expires
How
there,
much
how much profit we can make.
for? Okay. And how much is daily T3?
That is
17
18,
point
18, 18,
17.8. Well, 18. Okay.
18,
Good.
yes.
Okay.
So T1 is 16.5, right?
Yeah.
And T2 is 17.4
Yeah.
and T3 is 18. You can see the Excel sheet, correct?
Yes. Yeah. I can see.
Okay. So we have purchased 16.5. If it expires at 16.5,
Okay.
Profit and loss. So we will get 0 rupees back. Our whole premium will be gone. 16.5. The same, whatever
Mhm.
strike price we have chosen, the same
Okay.
strike it expires, we will get
Right.
zero refund. So our loss will be 0.58.
0.08,
0.58 will be our loss. Right?
0.5. Yeah, yeah.
Lot size is 100. So you will be losing 100 into,
$58. 58. $58. Yeah.
yeah,
Okay.
yeah, total loss. Second is 17.4, right?
17.4 minus 17.080.
Hmm.
30. Yeah.
17.4 minus 17.08, correct?
32. Yeah.
So profit will be 0.32, like this,
No,
right?
that will be a loss, right? Like 32 will be a loss because of 17.4.
No, it is profit, right? If it expires at 17.08, then you will be net to net. But
Oh, right.
now the option is expiring more than that, right? So that will be a profit
Not
point.
more. Oh, correct, correct. Got it. Yes. Yeah,
Yeah,
yeah, yeah.
right. So
So
your
profit will be
profit $100 into
$32. Yeah.
$32, right?
Okay.
So in case
There
of
80,
18,
8.82.
0.92, right?
0.92, sorry. 92. Yeah.
Yeah. So
So
you will be
92.
having $92.
Okay, okay.
So whatever the price is, it expires below 16.5, you will get zero refund. Below or
Right.
16.5 or less than 16.5, then you will get zero.
But the premium 0.58 will be lost premium.
Yes, yes.
Okay.
Full amount will be lost, right? Like minus
Right.
50 will be in a loss of.
Correct.
If it is,
58.
yeah, if it is expires at 16.5 or less than 16.5, then you will be in a
Okay.
loss of $58.
So which means that on before Friday, this is for sell or buy actually?
This is buy. We are buying because we have considered the
Buy.
uptrend, right? And we have considered the call price, call option.
Okay. Okay. Okay.
So that we have to decide based on the charts. We have seen the uptrend, and we
Oh,
decided that we are going to buy a call with a strike price of 16.5.
okay. Okay.
Right.
So it's
So this
actually
is
it's called a long option buy, right?
long naked option. We have many strategies to discuss, like long strategy, short strategy. This is single lot, only the
Hmm.
naked call option. Naked. This is called naked
Okay.
call option buy.
Okay. Single lot. Okay.
So you would have paid amount. Whenever you have purchased it, you have paid 6.58 into 100. You would have paid $58
Correct.
at the time you have purchased one lot, right?
Okay. Right.
Correct.
So if this didn't before next Friday,
Hmm.
if we should exercise, or it automatically will be exercised at the end of the day.
I
We
am not
should.
sure about. I'm not sure about there, but here we have to do it manually in stocks. But
Oh, I see.
but in index it
Okay.
will be done automatically in indexes. But in stocks we have to do it manually.
So what happens if we forget on Friday? Like forget means like
Yeah.
by unknowingly we miss it
So
on
we have
Friday
to
before
pay.
Friday.
So we have to buy the stocks. So
Oh, I
you
see. Okay.
so in that case, if you had one lot, you should buy 100 quantities of this stock.
Okay. So that means that they will automatically probably buy and say, keep it for us.
Huh.
The brokerage.
Brokerage, and there may be some penalty. I don't know about there. Like they may be charging
Okay.
some penalty, or how is it?
Okay.
So
Okay.
that you can check with your broker.
Okay. So
Okay.
if the stock moves on the other side, we cannot come out of it, right? So once we buy it, that's it. We have to
You can
hold
come
it.
out of it. Yeah, that's what I'll just explain you from the chart, like how to use the stop loss also. This we have spoken about the targets, right?
Oh, yes, correct. Yeah.
So I'll tell you when to exit also,
Okay.
because we don't want to book all the losses, right?
Yes. Yeah. Can you show me the chart once again? Just like
Yes, yes. One second.
the gain and loss, I will just note down. This Excel sheet actually.
Okay, Excel sheet also. Yeah. Now is it visible?
It's still loading.
Okay.
Yeah, it is okay now. Yeah. So first trade 0.
See, for options, you have to do more work actually because you have to check the hourly chart as well as the daily chart
Okay.
to get more accuracy.
Oh, okay.
Because sometimes the hourly chart may tell you that you can buy, but the daily chart will not tell you that you should buy it, right?
Right, right. Yeah. Yeah, this looks good. We can move on.
Okay, this is clear, right? Now
This is clear. Yeah,
now
yeah.
we'll talk about stop loss, how to use the stop loss.
Okay.
Stop loss and targets. See, targets we have decided based on this Bollinger Band, right?
Yes, yes, yeah. So we only Bollinger Band is required in this case, right? We don't need to see any other
Yes.
indicators.
We can see this is the particular use case in which we are using only the Bollinger Band, but there may be a different use case in which we may need to use this pivot
Other,
also.
okay, okay,
So that I will explain you. If we see any other use case, I'll explain you that also.
okay.
Okay. So see, in this use case, our stop loss will be here.
Correct. Okay,
Once the stock price goes below 16.07
right.
and it closes, the
Correct.
it has to close on per hour basis.
Correct.
Below
Yeah, okay.
16, then we will exit our trade.
Right. Okay.
Yeah. Okay. And second option that you can use it like you can use the risk and reward ratio also. Since we are
That's
buying
nice.
since we are buying ATM, right? At the money we have purchased, we can use risk and reward ratio like let's say 16.5 premium, right? And
Okay.
target is 17.5, correct? Like 1 rupee.
Right.
You're taking a reward of 1 rupee here, right?
Yes.
Then you can
So
consider a stop loss of like zero point 0.5 or
point 5. Okay.
0.25 or one like that. You can consider based on your risk appetite. So that is one
Okay.
more way to do it.
Okay. Okay. Stop loss will be like half of the target reward.
Because like 1:2 risk reward ratio, right? You can consider.
Yeah. Okay. Okay. Yeah.
Okay, clear stop loss and targets.
Yeah. That's good. Yeah.
So now we can see a second use case, like in this scenario, right?
Yeah.
Here at the top, you can see, right? Where when the candle is at the top, right?
It's actually, I'm not seeing anything.
Chart is not visible
It's not visible actually.
now.
It is still, it's still loading.
Okay.
Yeah. Now it's good.
Okay. So we will take one more use case wherein our candle is at the top of the Bollinger Band, right? Here.
Okay. Okay. This for downtrend.
This for downtrend.
Okay.
So, or can we choose any other stock? Because here we have to see the historical data. We have to see on the daily chart also. See, the date was 14th of July, right? 14th of July.
Yes. Right.
The hourly chart, and we can see the daily chart also of 14th of July. 14th of July.
So what is in the background that R1, R2? What is that actually?
Where?
In the chart, like there's a S1, S2, R1,
That
R2.
is pivot. Now I've explained you about pivot, right? Pivot
Yes.
points,
Okay.
support and
Oh,
resistance.
pivot points. Okay.
Support
Okay.
and resistance.
Okay. Okay. Okay.
So
Oh, so
14,
that we can do it on the chart itself. We can have it, right? Like permanently in the chart.
you can have it permanently. Yes.
Okay. How do we add it? Indicate by indicator.
See, once you go to indicator, here you will get pivot
Pivot.
points. Standard first one, pivot point
Oh,
standard.
pivot standard. Oh, I see.
And
Okay.
add it. And
Okay.
see, if you are trading here, then no need to bother about the previous pivot points. These areas
Okay.
are not useful. Only the current one you
Oh,
have to
okay.
add these lines, the current line.
Okay. Okay. I see. Okay.
And even you can, if you want to change the settings, you can change from your settings, right?
Okay. Okay. Yeah.
Visibility, right? Inputs. These are the inputs. So
Okay.
here it is showing you five support and five resistance, right? So five support
Okay.
and five resistance may not be needed, so we can use two support and two
Two
resistance.
subs. Okay. Okay. Closest one we can use.
And now the chart is
Okay.
also clear. Earlier it was like hodgepodge and all. Now the chart
Yeah.
is
Yeah. Right.
so 14 July. You can see that the chart was here, right?
Okay.
So it was a uptrend. Daily chart
Right.
was showing uptrend, and this is also showing uptrend. But the thing is that both of the candles were at the top of the Bollinger Band, right?
Yes. Yeah.
So we have to try to take a short position there.
Okay.
So how do we take the short position? We can consider our blue line as the first target and the lower Bollinger Band as our third target, right?
Okay. Yes. Yeah.
So here the price was around 20.5
Okay. Yeah.
and our target is around, what is this?
19.
19. Okay.
Yeah.
So now we have to see the strike price of 19 PE put
Okay.
because we
So
are
here,
going.
just directly below that green candle or red candle, that is where we need to take, right?
We have to wait for this candle close and we have to buy and short at the high. If price crosses the high, we have to buy, and if price crosses below the green candle, then we will take short. So here we have to take a short position.
No, I'm just checking, like, that the 20.5 19. So before that Bollinger Band, how it is created. So that is below the red candle, that is where we need to take T1 and T2.
Yes, we have to take the position here, but our targets will always be this zone.
Okay. Now what I'm saying is that you're keeping it bit right, but it has to be, the target has to be just below that red candle, right?
Yeah, yeah. Here
Not, it's
only because
still left. Little bit, if you move the cursor bit left hand side. Yeah, that is where you need to take the T2, right? Because that is where now the candle is formed. And
yes,
now,
yes. The blue line. Yeah, whatever the price at that time, blue line, you have to take that price
okay,
based on the
yeah, exactly.
yeah.
Okay, got it. Yes, yeah, okay.
Because right now the chart is already formed, so I am
Formed, yeah, yes.
I'm
Right, right.
I'm able to see 19 only, so that is why I'm considering 19. But you have to take the price at the blue candle, blue line only.
Correct. Got it. Okay. Same as the below
Yeah, yeah.
T2 also.
So
Okay.
just for your for you to explain, I am considering that 19.
Right. Okay, okay.
Okay. So at the time 20.5 is our price, then we have to see the strike price of 19 PE,
Oh,
right? So this is basically a reversal pattern. Means if we are in a downtrend, then we can predict the bottom. And if we are at the top, then we can predict the top here. So if any of these four candles or hammers are formed at the bottom, then we will see that there may be a reversal from here. And if any of these four candles are formed at the top, then we may see a downside from there. So all the four
Okay.
candles are called as reversal hammer. It doesn't mean that inverted hammer means that it has to be formed at the top or it has to be formed at the bottom. No, nothing like that. All the four hammers will work as a reversal pattern.
Okay.
Find this clear?
Yes.
I'll show you on chart. So basically, you need to practice and you need to train your eye to find these patterns and see the reversal, right? See here at the top, you can see, right?
Mm.
Kind of inverted hammer, right?
Mm.
But see, nothing is 100%. Means all the time it may not work. Like 60-70% it will work. It's not like that 100% if a hammer is formed, it will come down or it will go up from there, right? See here at the top, right? So there was uptrend, and you can see a hammer is formed, and after that, the downtrend started, right? Here
Mm.
also you can
To
see
be on
that.
the safer side,
Uh,
should we confirm the trend by
yes,
waiting or something?
yes, we have to wait. We can wait like this. The price, based on the price, we can get a confirmation. So here, if I put my cursor on this hammer, you can see that prices, right? Open, high, low, and close. Four prices are there in this, correct?
Yes.
So now I have to wait. If you want to get a confirmation, you have to wait for the next candle to cross, whether it crosses the high price or the low price here. So once you
Mm.
get a confirmation, then you can take the trade. So in this scenario, you can see that the low price crossed in the next candle here, somewhere here, right?
Yeah.
So at that time, you can take a short entry or you can sell from there.
Okay.
Right. So same thing here also, you have to wait for the price to cross the high or low price of this hammer. So once the next candle crosses the high, see here it has crossed. Like this, right? So next candle cross this price, here you can take a buy entry.
Right.
Okay, and your stop loss will be here, low of the hammer. Okay, this is
Okay.
clear.
Yes.
And how to find the target? Target you can find the previous high. See, like this, once the stock started, you can see the previous high was here, right? So this may
Mm.
be your targets, like the profit booking point.
Okay.
So based on the hammer, you can take a confirmation and then you can take a entry, and the hammer itself will tell you that where will be your stop loss. Entry and stop loss hammer will confirm you, and targets you can find based on the previous candles.
Okay.
But first we have to see the trend, like how is the trend in the previous candle. See here there was a downtrend, right? So then I got a hammer. That means I have a confirmation now. First confirmation that after a downtrend a hammer is formed, right? Second confirmation I'll get once the price crosses it. So there will be two checks. So there will be two checks. First check we have to do the trend. We have to see the trend. Then we have to see a hammer, and then it has to cross the price, high price of the hammer. Same thing here also. You can see there was a trend, uptrend. The hammer is formed, and then once the next candle crosses the low, we can take a short position here.
Okay.
Right. So the higher the time frame you are using in this, the higher will be your accuracy. Right. See. If you are using 5 minutes, 10 minutes, and 15 minutes time frame, your accuracy will be less because there will be lot of manipulation, stop loss hitting, all those things will be happening in shorter time frame. But if you are using higher time frame like 1 hour, 1 day, then you will get more accuracy, like 60-70% accuracy if you are using the hammer.
Okay.
So this clear hammer.
Yes.
See this one. 1 second, I'll show you one different hammer also. 1 second. See here, a normal hammer, right? You can see a normal hammer here at the top.
Mm.
So there was a uptrend, a normal hammer, but here see there was some consolidation going on, right? So you may have to wait, otherwise your stop loss will be hit here, right? My stop loss will be high
Yeah.
up here, right? But it hit and after that it went down.
Right.
So that comes with experience. Actually, once you start using it for some time, you will quickly know like what is happening at the top, right? So I will also explain you what is accumulation and what is distribution and what is consolidation. So, but this is basically the first step that we are learning, that uptrend, hammer, and if the price crosses the low, we can take a short position.
It's a short position. Sorry, I didn't get.
Yeah, okay. See, there are two types of trader in the market, right? Buyer and seller, right? See, these things, if you are holding a stock, like if you are holding for long term, if you have taken a delivery, then you can buy and then you can sell, right?
Mm.
There is one more thing called shorting, which you can do even without holding the stock in intraday.
Okay.
So what happens if you are still not holding the stock in intraday, you can sell that stock. So like this here, let's say there was an uptrend and a hammer is formed, and now I think that the stock may go down from here, right? So what I can do is that I can do a shorting in intraday so that I can earn some profits by shorting it, right? Means selling. But this you can do only in intraday because you are not
Mm.
holding that stock, right? So this you can do intraday and you can earn some points quickly and go. So those who are not see, this is basically for those traders. Sometimes they don't want to hold the stocks in cash for long position. What they will do, they will just come in the intraday. They will short. They will make some money and then they will go. So daily they will do like this only. So they don't want to hold that stock for long term, 3 months, 6 months, 1 year. They don't want to get their capital stuck in any of the stocks. So they will just do this kind of shorting in intraday. They will earn some profits, 0.5%, 0.75% in a day, and then they will go.
Do you need any kind of capital here or no? I
Yes,
mean, at
capital is
least.
required. At least some basic capital is required. See, at least 50-60% you need it because the remaining capital, the broker will give you margin for intraday. But at least you need some capital. Like if you have 1 lakh capital, then I think broker can give you a margin of 2 lakh or 2.5 lakh like
Okay.
for intraday. And then you can earn some profits and then you can go like 0.5 or 0.75 like that. It's basically our targets to hold it in intraday. So this strategy basically you can use it for shorting intraday also. Okay, this clear?
Yeah.
Okay. Show you some more case studies. And one more thing, uptrend and downtrend, right? So just try to keep in mind that at least you see 4 to 5 candles. See, like here, you can see a hammer, right?
Yeah.
So prior to that, to identify a trend, you need at least 4 candles. Then only you should get a confirmation that there is some trend going on. There should not be any consolidation like this, right?
Mm.
There has to be a trend and minimum 4 to 5 candles has to be present. See, like this trend is there, here also trend is there, right? But here there is
Mm.
no trend because mostly the kind of consolidation. Here also mostly kind of consolidation. Here also mostly kind of consolidation. But here the trend started.
Okay, if you go little left of your
Ah,
whatever the no, no, where you had
here,
marked it,
here,
speed go. No.
here.
A little bit of left, further left, 4, 5. There are two
Yes.
hammers there, and next to it, next to it.
Here.
They are in green. Yeah.
Okay.
Are
So
they
this one.
hammers? Yeah.
Yes, yes. Because there was a downtrend, right?
Yeah.
Hammers are there, yes. So here, see here what you have to do. Here the scenario is different. There are actually two
Mm-hmm.
hammers formed, right?
Mm.
Two types of hammer are here, right? Right? So
Yeah.
what you have to do, you have to merge these two candles and then you have to find a high and low price and based on that you have to trade. Means this hammer is high price and this hammer low price you have to consider. Okay, 1 second.
Okay.
I will explain you one more example. See, let's say there is one hammer like this, okay, and there is one hammer like this, okay.
Mm.
So in this scenario, what you have to do, you have to consider this high price and this low price. Means the third candle has to go down, then only you will take a position, or it has to cross this high, then only you should take the position. So this is
Okay.
basically a merge of two hammers, right? Earlier we were talking about only one hammer, but here since the system has formed two hammers, we have to merge and see the high and low price of the hammer. Combine it and see. So similarly, if we have 3 hammers or 4 hammers, similarly we have to combine all those and find the highest price and the lowest price, and based on that we have to consider it.
Okay.
It's clear?
Yeah. Yeah. Got it.
So see, the hammer is basically a candle which I have explained you, but every stock or every index may form a separate setup, right?
Right.
Sometimes
Okay.
there may be 5 candles, sometimes there may be 10 candles also in the trend, right? So here you can see so many candles are there, right? One, two, three, four, five, six. 6 candles are there. There may be 10 candles. Sometimes what stock will do, it will start coming down. It will do a consolidation. After that, it will go down again. So each case study or each pattern or each setup will be different thinking of the stock because every stock is having a different behavior. But but the strategy and the checks will work the same pattern, right? Trend, hammer, check the high and low. Based on that, take the trade. So that checks you have to do for each of the stock. That's just remember those 3 steps.
Okay.
So just try to see and just try to check some charts if you get some time and see if you are able to identify it, and once the market opens, try to see or try to trade some quantity, one quantity or two quantity or three quantity like that, and see if it is working or not for you. Because practice is important.
Right. Yeah.
So clear, all clear for today. Anything you want to ask? Any doubts?
No, I think we are good. Timer.
Okay. So are
Just
you
that I
able?
have to get.
So how you are feeling? Whether you are able to get it, like how it is working for you, like these things.
Yeah, it is good so far. Hopefully, yeah, the more I learn, more interest will come. So only way is to practice, as you said.
Hmm.
All these things we can say, okay, but the moment you are taking it live, I think it will be, it requires some practice.
So you have you must have seen Mahabharata, right?
Hmm.
So you know about
Right.
Karna. So you know about Karna in Mahabharata.
Yeah, current Danashur hai.
Ah, so he has all
Hmm.
the knowledge, but when he went to, he has a shrap, right? When he went to the war, he will forget everything. So trading is also like that.
Yeah, it looks like that. And
Hmm.
all our friends will.
So you have to practice it. Once you practice, then only you will get it everything.
Okay.
So you have to show some interest. Once you show interest, then you will find it very very interesting.
Okay. This is a full-time profession actually. So
Yes,
yeah, I will
yes.
try to make it, make
I am
some.
doing I am doing since 10 years. When I was working at that time, I started like
Mm,
along with the job I was doing for 3 4 years along with the job,
mm,
and after that when
mm.
I thought that it will work, then I started full time.
Okay.
So these days it's full
Okay.
time only. These days like it's a full time profession only. It's a kind of a skill that everybody has to learn if they want to trade
Mm.
or if they want to invest.
Okay.
See, I am doing training, I am doing trading, and I am doing portfolio management. All those things I am doing, right? So there are multiple things you can do in this.
Okay. Yeah, let's
Okay.
start with this and maybe we'll go further.
Yeah, sure. So see, first we will focus on this technical analysis. See, that is why earlier I have told you that first you see how the beginner course is, how the basics are working. If you like it, then you can go for the advanced thing which we can use in FNO, right? So there is no point in wasting the money if you don't like the basics, right?
Mm. Okay.
So that is why I told you start from basics, start from the beginner course, and I will give you some information about future and options also, how to use it. And then if you like it, you can go for further strategies that we use in future and options to trade.
Okay.
Okay. So next
Yeah.
class when you will take tomorrow? Are you available?
Yeah. Anytime. Tomorrow. Yes. Same time during tomorrow.
Same time. Okay, fine. Then we will do
Oh,
same
may
time.
not be there. No, no, no. Tomorrow I'm not there. I have to take Shreya.
You
To take
yeah.
Shreya.
Yeah, that's why I
To
asked
cricket.
you. Yeah, that's why I asked you because weekend
Correct.
you are going for cricket now.
Yeah. Tomorrow I have to take
So
it. Sunday. But evening I can do tomorrow.
evening, what time you are available in the like? Are you available late evenings around 7?
Yeah, 7 we can do. It will be 1 hour session only, right?
1 hour only. Yes, 1 hour only will do.
Okay. That should
Okay,
be
so
okay.
fine, fine. I will text you the exact timings, but mostly it will be around 7 or 8.
Okay.
Fine.
Fine.
Okay.
Okay.
And you can share me your email ID so that I'll share this recording with you, and then if you want, you can watch it later. Share me your email ID on. You can share it on WhatsApp. Then I'll share this recording.
I'm sending you my email ID.
Okay, fine. So this I will put in Google Drive, and then I will give you the access. Then you can watch it.
Okay.
Okay, fine. So just if you get time, just try to see it, just try to practice, and whatever doubts you have, we can clarify in the next class. Okay. Bye
Thanks,
then.
Gaurav. Yeah. I will see you next time.
Ah, okay. Right.
Bye bye. 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 Bye bye.
mm, 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 mm. mm, 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 mm.